anticipated. Obviously, 1 month doesn't make a number, doesn't make a trend, but man, the market's reacting in a big way.
Yeah, at first I thought they just love Rick. You know, Rick talks, boom, there it goes. The thing about this, the most important number to come out of this monthly report is not the year over year. It's that monthly core inflation. That it came down is great news. It's not a trend because it's just 1 month. And it's not that low. I mean, at 0.3%, it's great that we've made progress, but that still remains higher than where the Fed wants it. Normally, if they're in a period where they're raising 25 basis points per meeting, there's a little more space for cooling off period. If you're raising 75 basis points a meeting, we're going to have to figure out what the timing is of the pivot. And unless and until you get that core monthly inflation down in a comfortable range, I think the voices that are saying slow down, cool off are still going to be a little muted.
Market's not listening to you yet, Austin. The Dow is now implied up by 783 points. Go ahead, correction, Steve?
Correct. Yeah, it was 0.6 on owner's equivalent, not 0.5. It just came, but it did come down from 0.8. I think that helps a little bit.
Tyler, your take on this. Does the Fed have any less pressure on it at this moment as a result of these numbers?
Well, I agree with Steve that there's actually a little bit less that's encouraging. And it's great that core came down. It's great that headline came down. There's a little bit less to be encouraged about when you dig into the details. I think, and correct me if I'm wrong, Steve, it looks like overall shelter was up 0.8 month over month.
Yes,
and
that's correct.
It looks like this was dragged down by gas, fuel, and also used cars. Pretty much, those are the big drivers. So I think in terms of the Fed's thinking, look, the lesson of the 1970s is they tried 4 times before Paul Volcker, and actually including early Paul Volcker, they tried to get inflation under control, and each of those times they paused or pivoted before the job was done. And they didn't pause because of a 20% equity correction. They paused because there were financial stability concerns. They paused because inflation was coming down, even though it wasn't down below 3% yet. They paused because unemployment was ticking up. And so I think that the lesson of the 1970s is that we could probably be looking at a Fed that draws some of these different data points as motivation for a pause or pivot.
All right, can I just say, investors right now are going la, 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 not listening to any of you because the Dow futures are now up by about 800 points. Nancy, what do you think? Does that make sense, the market reaction to this?
It does. The whisper number was for a softer CPI, but I think the market, everyone is so bearish. Consensus is definitely that we're heading into a recession with market participants. So it's not surprising at all that with a softer number, we're going to get a good pop because a lot of people have been, weaning the other way. So it's always good to be a contrarian, especially when you see the numbers. And, they're still incredibly high. And I think the one thing I would remind investors that future inflation expectations are actually ridiculously low, even though we got a slightly lower print. If you look at inflation break-evens, they're all in the 2 handle, even just 1, 2, 3 years out. So the inflation curve is dramatically priced to fall, and that could be an opportunity for investors to say, look, maybe it's a good time to be adding some inflation because the market does have so much confidence that the Fed is going to get the job done here.
Nancy, fool me once, fool me twice, 3 times. I mean, previous pivot false starts, we saw some pretty good rallies based on the notion that the pivot was coming. Is this real this time? Just the possibility? Or is it buyer beware? We've seen it before. I mean, why are people so quick to embrace something that's burned them so badly before?
Well, I think it's all about expectations. Just like stocks, the rates markets are all about what's expected in the future. And going into the summer, the market had priced in cuts in 23. Now we are fully pricing in more hikes. So.
Oh, sorry. Now I was asking Steve to look at Fed funds. I just want to see.
Keep talking, Lance.
486. Yeah. Betsy, if you can hear me over the airwaves here, make another chart. We'll get that one up. Thanks, Betsy.
486.
Nancy, go ahead. Finish your thought.
My thought was that the market has priced for more hikes. So I think there is room for the Fed pivot, so to speak, because in the summer, the market had priced in cuts going out into 23, and those have really been erased. So there is room in the rates market for a surprise to the upside.
Kathy, let's get you into this conversation, too. Again, I don't know how this changes your economic outlook, but in terms of what you think it means for the Fed, what happens here?
Well, it's certainly an encouraging number, Becky, but I think we do need caution that, as been said before, we've been fooled before on numbers, and we're going to get another very important inflation print the first day of the two-day meeting for the Fed when they meet again for the policy meeting. And I think in terms of the pivot, I see the market jumping to the last pivot. So I see several pivots. The first pivot is, okay, when did they reduce the size of the rate increases? And that today's numbers does support the idea they go from 75 to 50 in the December meeting. But that, as Chairman Powell said, they're not done yet, and there's further to go.